There's been a postponement of the 176th OPEC meeting this year. The twice-annual event had been set for the 25th of June and is now scheduled for the 1st of July. There will be an OPEC meeting on the 2nd as well, which will include non-OPEC nations, most notably Russia. Nitesh Shah joins us now from WisdomTree. Good to talk to you. Thanks indeed for dropping by.
Hi there.
First of all, what is the reason for this postponement? Do you think any dark forces at work, or should we not read too much into this?
I think it's relatively benign. So on the 28th and 29th of this month, we've got the G20 meeting. And at the G20 meeting, the market hopes that some answers towards a trade deal would be given between the US and China. And that's very important in terms of mapping out the future demand for oil. And it only makes sense to have a meeting on oil policy after we have a better handle on the demand situation. So that's the main reason I think that the meeting got delayed from the 25th, 26th to the 1st and 2nd of July. And it came mainly at the request of Russia, which is a non-OPEC member that partners with the OPEC group.
Yeah, you're talking there about the demand side. We've also got to consider the supply side as well.
Yeah.
What's going to be the priority out of this meeting, do you think, for OPEC and non-OPEC nations?
So I think that the priority is to get everyone on board with extending the production cuts that are already in place. So in December of last year, the OPEC group and its partners decided to cut back on oil production by 1.2 million barrels relative to October 2018 levels. And they've been doing very successfully at achieving that. The question is, do they extend? And there's two things on their minds right now. There are three countries that are exempt from the program: Venezuela, Iran, and Libya. And as a result of economic implosion and sanctions, these countries have been reducing their production over and above what the OPEC group had decided. And so does the rest of OPEC compensate for that? And they've weighed that up against if the demand picture in the future softens up, should they be tightening up a little bit more?
And of course, over that 6-month period, the demand side has changed considerably. And we just recently heard from the Fed, of course, and we've got the Bank of England as well, just saying it's lowered its growth forecast. So clearly the demand side is beginning to worry. How does this change things in terms of the numbers that we're going to get in terms of what the targets are now for OPEC?
Yeah, so as I said, the G20 meeting at the end of this month will be very decisive in actually just understanding whether the US and China are even on the right path towards getting towards a resolution. If questions can be answered on the trade front, we could possibly strengthen demand forecasts. But if it looks like the trade war, the tit-for-tat trade war is going to continue, then the demand path will weaken. So my best guess is that the OPEC group are targeting around an extension of a 1 million barrel per day cut relative to the October 2018 levels. But if at the end of this month it looks like the trade situation is deteriorating, they could be tightening up a lot more than that.
And do you see a consensus between Saudi Arabia, the largest producer within OPEC, and the biggest non-OPEC producer, Russia? Do you see a consensus amongst those two big nations on cuts, or is there inevitably going to be a disagreement?
I think there are disagreements around the fringes, but typically what's happened in the last couple of years is that that Russia, as the largest non-OPEC member, and Saudi Arabia, as the largest OPEC member, have a bilateral meeting way before the rest of the OPEC and non-OPEC countries meet. They decide on a policy, and then they go into the OPEC meetings as a matter of formality to convince the rest of the members to agree with what they've already agreed in their bilateral meeting. So that meeting's already taken place. They're largely on the same page to continue with cuts. But the question mark is all on the demand side at this point in time, which hopefully we'll get some answers to fairly soon.
Yeah, and you mentioned that 2-year period historically where we've had these meetings build between non-OPEC and OPEC. In that period, of course, has been Donald Trump and his goal for pushing out more oil production in the US. I think actually the US is it right in saying this is now the world's largest single producer of oil?
Yes, it is. It's the largest crude oil producer. It produces just over 12 million barrels per day. So it's surpassed both Russia and Saudi Arabia in that regard. And it's expanding production in general. I mean, last few months have seen rig counts decline and production slowing. But if WTI prices had held up sort of around the 55 region, you would probably see more rigs coming into operation. So the US is most likely to continue to increase its market share.
And my understanding is that inventory data is running at around about 7% above the 5-year average. So I think there's quite a lot of oil sloshing around in the US system, and of course that's coming onto the market, which are keeping prices down. Yeah.
So when it comes to the US, it's gone from a market that was almost zero exports, crude exports, back in 2014 to around 3 million barrels per day today. So that's a rapid increase. The US doesn't have the infrastructure to export at much higher volumes, but it is building out that infrastructure right now. So that glut of oil that sits in the US, which is leading to WTI prices at almost a $10 discount to Brent, probably that discount will start to erode over time once that infrastructure comes into play. But that's a multi-year story. It's not going to happen in the next few months.
Yeah. You mentioned the 3 countries which are exempt when talking about how OPEC operates, Venezuela, Iran and Libya. Let's talk about Iran, because there's been a lot of geopolitical concerns about Iran. This has been a thorn in the side of the US for a long while politically anyway, and most recently with developments in the Straits of Hormuz. How do we look at Iran when considering the OPEC meeting? What is happening in Iran? Are they producing at full steam at the moment anyway, or are they already under restrictions, or are they? What's the situation?
Yeah, so because of the sanctions that are placed on it by the US and the fact that those waivers for its consumers have all lapsed, Iranian production has been plummeting very hard. So Iran feels like it's been backed into a corner. It wants to wriggle out of its nuclear agreements and is unable to do so. So by the 27th of this month, it will be found in breach of its nuclear accord. That does increase the risk of military confrontation in the region. There have been attacks on vessels around Iran, very close to the Strait of Hormuz. And the Strait of Hormuz is a very important, what they call a choke point, an area for vessels to move through. About 30% of all seaborne oil moves through that region. And although Iran hasn't admitted to any of those attacks, the finger's being pointed at it. So the risk of military confrontation is very high at this point in time, and that could lead to a fairly sharp increase in geopolitical premium in oil prices, and it's clearly not being priced in at the moment.
Okay, well, that is to one side, I guess, because we don't know that that's going to develop. But let's bring up a chart of Brent. I know this is the benchmark that you look at, and you think that perhaps maybe relates most directly to OPEC nations. We're currently at 63.30. What is your forecast, Iran aside, and any escalation of the geopolitical concerns there? Where do you see the price as we go into the back end of 2019?
Yeah, so I think Brent prices will probably end the year around $75 a barrel. It's clear that OPEC as a group want to keep the markets undersupplied, but not by massive amounts, but they want to keep a structural undersupply there to eat up above ground inventory. And with that, I think the oil prices will recover to around that $75 region. And that would justify the OPEC group to continue to invest in the oil and gas industry, where there's been a dearth of investment over the last decade.
Okay, all right. Well, thanks indeed for joining us, Nitesh. It's a pleasure once again to have you here in the studio. It's Nitesh Shah, who is from WisdomTree.